You're live.
All right, we'll call Senate revenue to order. Don't mean to break up the party there in the back, but Mr. Moline's always causing trouble back there. I'll blame him. Judy, will you call the roll, please?
Senator French,
Here.
Senator Ide,
Here.
Senator McEwen,
Here.
Senator Pappas,
Here.
Chairman Biteman.
Here. Okey doke. First bill up for consideration today is Senate File 110, sponsored by Senator McEwen, personal property tax exemption. Senator, floor is yours. You can stay here, you can go up there, it doesn't matter to me, wherever you want to go.
Thank you, Mr. Chairman. I'm kind of fond of this seat, so I'll stay here. It's shaped to me. Thank you, Mr. Chairman, members of the Revenue Committee, and everybody else. I appreciate your time today. I'm going to be pretty brief on this. It's an exemption for the personal property tax, and it's worded that way versus repeal to make sure it's constitutional. If we put the word repeal in there, it would not be constitutional, I believe. So if you're confused why it says that, that's the reason on that. And I'm just going to start out. This is a horrific tax. This is the worst thing we could have ever dreamed up. Basically, what it does is it takes all your personal property and it puts a perpetual lien on it. I have a grinder in a grocery store, for example. That grinder is 32 years old. And twice a year, I send the government a check like it's brand new. So for the rest of the life of the grinder, the shelves, compressors, chairs, desks, filing cabinets, perpetual lien, just keep paying. So that really seems wrong. JFK, Ronald Reagan, Donald Trump, all lowered taxes while they were the presidents of the United States of America. And in the act of lowering the taxes, they revived the economy and generated more revenue for the government that way than they did by implementing another tax. So what I'd like us to do is get this passed, and we'll put anywhere from $135 to $160 million back into our local economies. And I spoke to some of the guys last night. That money's going to stay in the state of Wyoming. It's not going to leave. I've been reassured that. So we put $160 million into the economy in the state of Wyoming. And if you follow economic thoughts or laws, there's a guy named Milton Friedman out of the University of Chicago. Everybody ever heard of him? He has a philosophy about the velocity of money. So that $160 million interjected into the economy is going to keep turning over and over, thus generating more and more sales tax, allowing businesses the opportunity to grow and strengthen the economy. And as far as economic development, I'm a firm believer this is what our job is for economic development as a government entity. It's not giving a big box store a free parking lot or running their utilities for free. This is what we can do. And with that, I will stand for questions. Thank you.
Is there anybody wish to testify on the bill? Agencies, typically we go with agencies first. Anybody from the agencies want to come up? Welcome to Revenue.
Thank you, Mr. Chairman, members of the committee. My name is Brian Judkins. I am the Property Tax Division Administrator. Just a couple things I wanted to tell you guys or go over is as Senator McCohen had mentioned, revenue from personal property. I pulled some information out of the CAMA system for the 2022 data in the state, and it equates to a little over $2 billion of market value, which equates to about 150 million in tax revenue. A couple things I did want to mention, as you, Senator McCohen, as you mentioned your business personal property or business property that you use to you use that equipment in your business. This bill would make all business personal property exempt from taxation. It would also make all oil field equipment, the pump jacks, the compressor stations, the tanks, the gathering lines, all that is considered personal property. That would be exempt from taxation. And the other third thing that I wanted to reiterate is mobile homes, people that live in titled mobile homes, that is considered personal property in our CAMA system as well. So with that, I would stand for any questions.
Any questions? One question I have is do you have an idea of what the cost of administering this tax is for your department? It seems to be, I know the cost for private businesses and private individuals to comply with this, but what would the cost be? It seems like it would be a more costly tax to impose and make sure your enforcement compliance is there. So can you walk us through that?
Thank you, Mr. Chairman. So with the Department of Revenue, I also wanted to say, as you mentioned that question, department assessments that we value these large companies, railroads, telecoms, cable companies, airlines. We don't separate out that equipment, personal property equipment, from the value of that company as a whole. We value based on the financials. So as far as a cost, it really wouldn't cost the department anything to administer this exemption any differently. You may want to speak with the county assessors. They may have something maybe a little bit different to say than as far as the department's perspective on personal property.
Thank you. I guess to rephrase it, what is the most expensive tax for your department to collect?
I'm sorry, Mr. Chairman, the department doesn't collect any tax.
I mean, to administer.
To administer?
Yeah.
Well, within the CAMA system, Mr. Chairman, the all tax, property tax is administered through our CAMA system, whether it be personal property, industrial, commercial, residential, that's all encompassing within our CAMA system. So that's our primary function is administering that CAMA system to the local county government. So I'm not sure what you're asking with that.
Any other questions? Senator Ide?
Thank you, Chairman Beitman. How does that, you've got the all other classes of property, residential, commercial, ag, and then, those are on mills. And how does, I guess my question is that 150 million that you said that brings in revenue on the 2 billion evaluation, how does that get spread out? Local, towns, counties, state. Can you comment on that? Thank you.
Mr. Chairman, if I may, Senator Ide. Yeah, so our entire system is based on numbers, which is called abstract numbers. Those abstract numbers are tied to specific types of property. And at the end of the year, or during tax roll, and those numbers by the State Board of Equalization are certified to the counties. So we can extract specific types of property from that total value within our CAMA system. And then that total value is distributed to the counties collect that and they distribute it to their taxing entities.
All right, thank you, sir. I think we're all set. Anybody else wish to testify? Ms. Huxtable. Welcome back to Revenue.
Mr. Chairman, members of the committee, thank you. Apologize, my book is getting thicker and thicker instead of leaner and leaner, and I apologize for that. Converse County Assessor Dixie Huxtable, I have with me the Sweetwater Assessor and President of our association. Our association has not met and taken official position on this bill. We would typically consider this a tax policy decision, so as long as we can administer it, we would be here to say whether we could or could not, and then whatever consequences may have come from the bill. So specifically, the questions that we have on this bill start on page 2, line 1. And I guess we're questioning the intent of striking that language, line 1 on into line 4. That part of the statutes is really including other property besides personal property. So in the statute at that point, it does state that the county assessor or deputy assessor shall obtain from each property owner or person having control of taxable property in the assessment district for which they were appointed a full, complete, and detailed statement of the amount of the taxable property owned by or subject to the control of the property owner. That's real property. That's later in that chapter, it talks about personal property and filing of reports and so on and so forth. But that part of that language is specific to real property. That's our discovery, to be honest. When we go out and do field checks, which we are currently required to do once every 6 years, do a field inspection on real property. That's our discovery. We are taxed with locating, discovering, and valuing. Having that stricken from that, that somebody could force us or not allow us on there is concerning to us. So I guess I'd just like to know what the intent of that was. And then if you want specific numbers from some of our counties, we certainly have some of that.
Before you move on from that, can I ask you a question for a potential amendment? Because that's a good catch. What if we reinserted the stricken language, but after the word any on line 3 inserted real for real property, since we're basically exempting personal? So you can go in for the purposes of examining the real property, but not the personal property. Would that fix that?
I believe so. I'm not a legal expert at this, but that sounds like that would certainly be relevant because what we're doing field work on is real property.
Right.
We typically don't do a lot of field work on personal property anyway, but it's still within our right to do it. So as long as you are specific that it's to real property, that would be,
Okay.
at this point, it'd be acceptable to me.
Okay. So continue. I'm sorry to interrupt.
No, that's okay. I just was going to talk a little bit. The question was asked about personal property, and I've done the analysis for my county, and just my county and Converse County. The personal property tax, and as stated, that's all industrial personal property, which includes oil and gas extraction, pipelines, manufacturing of all different kinds of industrial. It includes commercial, so the service industry that has that kind of equipment, and then the mobile homes. In Converse County, that is roughly about $12.6 million in taxes that is collected from that type of property, which represents about 7.3% of my total tax, 7.3%. In Converse County, on any given year, 70 to 75% of those taxes go to schools in one form or another. Either the mandatory mills or BOCES or school districts or that type of thing. So that gives you kind of a guideline, at least in Converse County, of where we're at, and I'm sure the LSO or the department has statewide, but it is a it is a big number when you're talking 12.6 million, but it's 7.3% of my total value. And before somebody asked me about the time, it does take considerable time in my office. We send out notices to the taxpayers with their last year's rendition. Typically, those goes out at the end of the year, sometime between November, December. They are due back in our office by March 1st. If the taxpayer requests in writing by February 15th for an extension, it is automatically extended to April 1st. So we are dealing with personal property renditions, is what we call them, including oil and gas and other commercials, from January 1st, at least January 1st, until the 1st of April, because that's just the nature of the beast. Along with that, we're also dealing with mobile homes because we have stickers and some different processes for mobile homes. So it is a substantial amount of work that we do. A lot of it, we do field work in the fall. So we go out and figure out whether what's reported last year is what's really there. We do use imagery. So my county has flown our county repeatedly in the last 10 years or more. And I use that a lot in identifying equipment in the oil field primarily. I'm not going to see anybody's businesses, but when I go out and see a new oil pad, for example, I can see that equipment and then identify when the report comes in that we've picked it up or not. Companies are typically very, very good in my county working with us, taking us out, reviewing it. So it is a big task. I'm not going to lie about that, but it's one that we've taken on and taken a vested interest in it and worked hard with our companies to work together. And with that, I would stand for any questions.
Any questions for Ms. Huxtable? Senator Ide.
Thank you, Mr. Chair. Ms. Huxtable, you mentioned that 75% of that goes to schools on that collection of 7.3 of that 2.6 or 12.6. Why is, on real property, that much doesn't go to the schools, does it? I'm curious. I think it's 50, 60% from all other property, or on, that third leg of the minerals and industrial and all other. Why is that? Can you explain that 75%? Thank you.
Ms. Huxtable.
Mr. Chairman, Senator Ide, that percentage is true on all property that is locally assessed. That's based on the mill levy. So if you have 60 mills and you're giving, in that calculation, there's say 45 mills going to the schools, 45 divided by 50 is how you get that percentage. So all locally assessed that's tied to the mill levy is falling in that percentage. You're welcome.
I had a question on, you mentioned the flyovers. That can't be cheap. How much does that cost your county to do those flyovers?
Well, Mr. Chairman, we have done it for quite a few years. We do it over a 3-year span. So we fly every 3 years and make a payment annually. The last couple of times, because the state has funded some of that flyover in the concentrated areas in my county has picked up the rest of the county. So initially, we were in the ballpark of about $360,000 every flight. It's less than that now. We don't fly as detailed in some parts of the county. If there's nothing but trees, sometimes you can't see past them anyway. So we've learned as we went by. I would say annually, probably about $100,000 to $120,000 a year is what Converse County has chosen to pay to get not only the ortho straight down, which is what you typically see on a map server or a public site, or the obliques so that we can see. I will also tell you that we have used those to measure property when we have not been allowed onto private property, either because of a fence, lock gate, just not accessible. I will also tell you that those are they're fairly accurate if you can zoom in good enough to see the corner of the house. And you can measure all the angles of a house or a barn. So while we do use them because it's the best available information we have, it's maybe not as accurate when I'm going straight down and I'm measuring the square footage of the roof. Maybe that's not all living area, but we do have to use that at times when we're not allowed to get on the property.
A follow up to that, I'm assuming the GIS software has a cost unless you use a free software. Do you pay for the mapping software as well?
Mr. Chairman,
For the aerials and the
the
imagery?
people that we purchase that imagery from has software that comes with it
Mhm.
that's available to our county, similar to what the state does when they purchased it on a statewide basis and made it available to certain government offices. Our county does the same thing. We actually have a co-op in my county that involves a couple of towns and conservation and weed and pest, and we all share that data, so they have access to it. And that comes with the price. So built within that price is the cost of the software that can be monitored for security-wise. So some of it is public and some of it's not. Some of the utilities don't necessarily want to know where all the gas lines are for the whole world to see. So some of those are confidential but it's made available to everybody that has access to it.
Any more questions for Ms. Huxtable? Thank you, ma'am. Sir?
I'm Dave Davis. I'm the Sweetwater County Assessor. I'm also the president of our association, but like Ms. Huxtable said, we did not meet on this particular legislation, so I'm only speaking for myself. Did the math real quick last night, and my total personal property valuation, commercial and industrial, is $446 million. I take that by an average mill levy, and about $27.6 million disappears from Sweetwater County when this property becomes exempt. I did really, really quick math while Dixie was talking, and it's about 18% of my total valuation. So it's a very, very large number. It's going to affect the school districts, as we talked. It's also going to affect community college, municipalities. I mean, some of that personal property is located within the boundaries of the cities. They're going to be affected with this as well. One of the things I just wanted to point out, and this was the most recent change to the personal property legislation, was the de minimis language that was added. The de minimis language basically said if your market value of your personal property was less than 2,400, you were exempt from taxation. What it didn't say was that reporting is not required. So we as assessors looked at that, and most of us have decided that you still have to report that equipment. So until we get your return back, we don't know if you got a new equipment or got rid of old equipment, whether you're still above or below that $2,400 threshold. So in that situation, we're still making those companies actually report back to us the personal property they have on site. And then once we do the calculation, then we will exempt them if they meet the requirements. But the reporting is still there. The legislation you have here is exempting personal property, but if the legislature chooses to go this way, there may be some language you want to add to eliminate the reporting as well, just for clarification for us.
Thank you for that. That's a good catch. Any questions for Mr. Davis? You know, thank you. Thank you very much for that information. Any more public comment on Senate File 110? Welcome to Senate Revenue.
Good afternoon, Mr. Chairman, members of the committee, Pete Obermueller, Petroleum Association of Wyoming. Appreciate this bill, appreciate the opportunity to speak on it. Mr. Chairman, we support the bill, but so that you don't tire of me so quickly, I'm going to turn it over to my colleague, Mr. Ralston, who has spent a long time dealing with personal property tax as it relates to oil and gas equipment, and he's going to explain some of the inefficiencies with the particular tax as it relates to our work.
Thank you, Mr. Chairman. I'm Bobby Ralston. I'm with Occidental Petroleum, but today I'm testifying on behalf of PAW. I agree with Pete. This is a great tax to get rid of. It is very difficult to administer, and it's very difficult to audit. I think as hard as the assessors try, and they do a tremendous job, there's no guarantee that they're getting everything that's out there. Now, in the oil and gas industry, we are very good about opening up our books, making sure our gates aren't locked, taking the time to take them out so that they can see what's actually out there. But not every taxpayer is doing that. And so, they're not going to break into a building just to try to collect personal property. It's not really equally applied, as I stated, because big companies tend to report better than smaller companies do. We've got the personnel. Many times we've got a little bit more expertise. We might report more completely than somebody else, and there's no way to really tell that. So there's no really any way to tell whether the tax is being assessed equally. It's also unfair to, in my opinion, it's unfair to older equipment, because typically what happens is every year you index the original cost of the equipment based on the economy, and then you depreciate it. Well, the depreciation has a floor. The index doesn't. So you can have a piece of property that's 50 years old that is 3 or 4 times what its original cost might have been. So, and then finally, we pay a big tax on our production, but we also get the opportunity to pay a tax on the equipment that allows us to get taxed on our production. And I don't know that that's necessarily the way it should be. Some states do exempt personal property. Some states, for instance, Texas, it's done as your valuation is in a discounted cash flow. So what basically is on the equipment out there, you don't list all the equipment, is just the salvage value of the equipment. And many times that salvage value is really what's used to plug the well ultimately. So with that, Mr. Chairman, I'll stand for any questions.
Any questions for Mr. Ralston? Mr. Ralston, you mentioned you do pay a heavy tax on your production. You forgot to mention you also pay sales tax and use tax on the equipment that we're also charging you personal property tax on year after year. So, and that's a lot of money for a pipeline. Could you talk about all the sales and use tax that the oil and gas industry does pay, in addition to the ad valorem tax?
Well, Mr. Chairman, Ashley probably might be able to speak to that a little bit better. I know Pete's probably got that, more or less the exact amounts, but we pay sales tax on just about everything. It's certainly use tax.
So I guess that's a good segue to, unless Pete wants to take it.
Mr. Chairman, I'll just give you a number. In 2021, the oil and gas industry paid $46.3 million in sales and use tax.
Thank you. Ms. Harpstreet?
Mr. Chairman, members of the committee, my name is Ashley Harpstreet, Executive Director for Wyoming Taxpayers Association. Wyoming Taxpayers Association is a 501c4 think tank with a 501c3 research arm. We are not anti-tax, we're not pro-tax. We believe in sound tax policy for a healthy Wyoming economy. WTA believes tax policy is framed by a tax structure that is justified, equitable, stable, and transparent. We recognize the tool that exemptions can play in building a sound, viable economy for Wyoming, but also recognize exemptions are a privilege to conducting commerce. We further recognize exemption may erode the existing tax base, therefore creating pressure to seek other revenue sources. As such, existing and proposed exemptions should be scrutinized for the long-term effects on an overall revenue collections. Just as new taxes or increases in existing taxes should meet our cornerstones analysis, we believe that existing and new exemptions should be analyzed on the merits to be included into Wyoming's tax structure. With that in mind, Mr. Chairman and members of the committee, we do support Senate File 110, personal property tax exemption. We feel this exemption is justified as property taxes on tangible personal property create high compliance cost, administration cost, and can distort capital purchasing decisions, which ultimately increase the cost of end products for consumers. Regardless of the dollar figure your fiscal note represents, the benefit is a tax system devoid of pyramiding, costly administrative costs to individuals, businesses, and governments. It is equitable. The exemption is equitable in that eliminating the tax is applicable to all currently being taxed. This exemption could possibly create pressure to increase taxes on other taxpayers, but handled as a package of property tax relief, the legislature will have chosen a permanent elimination that increases the competitiveness of industries and that will ultimately drive sales and use tax receipts higher through in-state purchases and deployment of assets. It is stabled. As mentioned, inequitable, the benefits could outweigh the loss of revenue by economic gains of retaining and recruiting large taxpayers to Wyoming. Finally, this is transparent, accountable, and audible. It eliminates the taxpayer's administrative burden in addition to the government's cost to administer the tax. Didn't think about the drones earlier. As mentioned, in stability, the exemptions, benefits, and effects will be measured by a vibrant increase in economic activity. Thank you. Stand for questions.
Any questions? Appreciate that. Thank you. Stay close, just in case we have. Mr. Detai.
Thank you, Mr. Chairman. Honored to this is the first time I'm before your committee, Mr. Chairman, so.
Yeah, better introduce
I
yourself.
appreciate it. I'm Travis Deetime, I'm the Executive Director of the Wyoming Mining Association. I will be brief. We are in support of the bill. In addition, I'm going to go through my laundry list for the coal industry. State rents and royalties, ad valorem on property, abandoned mine land fees, sales and use taxes, ad valorem tax on production, federal mining, federal mineral bonus, which we still are paying a little bit on, severance taxes, and federal mineral royalties. And we also pay the black lung tax, which we don't have black lung in Wyoming, but we pay the lion's share of that federal tax, and all that money goes out of Wyoming. So we would love to see this go away. In discussion, I had all my members in Cheyenne here these past couple of days. Was talking with one of my coal operators, mid-sized coal operator. It's $1 million a year, and that's money that they are reinvesting if they're allowed to keep that in their pockets. They do reinvest. They buy new equipment. They buy new tires. There are hiring bonuses to get people to work. Not to just pile on to what my colleagues here said. We support it. This is a good bill, and I would stand for questions.
Yes, Senator McEwen.
Thank you, Mr. Chairman. I got a chance to talk to the petroleum guys last night, but I don't think I got a chance to talk to you. So the quick question is, I'm hearing a lot of pushback that if we get rid of this taxes, all the money's going to go to St. Louis, or it's going to go, and I guess I don't believe that, but I'm going to allow you to tell me where you think the money ends up. Thank you, Mr. Chairman.
Mr. Detai.
Mr. Chairman, Senator McEwen, that's an excellent question. When we were having this debate last year, when you guys, when the legislature approved a reduction in our severance taxes, that came up. And we heard about, well, this is just going to be ledgered somewhere in St. Louis. A ledger has two sides. And, the other side, you take that, and again, as I was saying, we have they tell me what they're going to do with it. We're going to reinvest it in equipment, in service and supplies, payroll, a bonus. Despite what's being said in the newspapers these days, the coal industry is not dying and it's not dead. Demand is very high right now. We could probably use another 200 coal miners up in the Powder River Basin right now to help meet that demand. We'd like some trains up there too, which is our big issue. But they're hiring, and we're in the same boat as a lot of companies finding employees. So we've got companies up there offering signing bonuses. You save a little money here, you spend it here, and it stays in Wyoming. And they're buying equipment in Wyoming, in Gillette, in Mills. They're buying services and supplies across the state, whether it's a consultant in Casper or in Laramie. My industry has invested a lot of money in this state, a lot of money, and they'll continue to do so. It's not going out of state, Senator. Long answer to a short question. A short answer to a long question, something like that.
I think Senator McEwen has a follow-up, and then.
I might live in the Powder River Basin. So it might have been a trick question. Actually, it's more of a comment, so I might be breaking a rule, but there are a lot of support companies that help drive the economy in that county where an animal from the desert comes from. But at the end of the day, I want to thank you for reassuring me that it's still going to stay around the state. Because if we do that, I just see this helping greatly. Thank you.
Mr. Obermueller, do you have a?
I do,
comment?
Mr. Chairman. I really appreciate it because this is a really critical question, and it is we often hear that criticism. And as it relates to oil and gas, about 80 to 85% of all the wells owned and operated in Wyoming are Wyoming-based companies, small mom and pop Wyoming companies. The Wyoming Geological Survey just put out a little summary report about oil and gas in Wyoming, and about 30%, between 30 and 35% of all the production in Wyoming is made up from the 300 plus companies that individually produce 2% or less than the total amount. These are guys and gals who are out there sometimes cranking by hand a barrel a month. And so will there be, as it relates to Wyoming, I mean, if you look at the pie of production in Wyoming, you take away 35% of that, of the Wyoming-based people, that is an enormous hit to our industry and to the state of Wyoming. Quite frankly, this bill helps those people the most, because those are the people that take over the wells after they have been drilled and initially produced by companies like Mr. Ralston's. They're the ones that keep the wells open and producing with old equipment that continues to be indexed the way Mr. Ralston talked about. So, Mr. Chairman, my view is this bill is frankly more helpful to the Wyoming-based companies at the end of the day, and that's why I like it.
Mr. Obermueller, on that point, and I'll ask you the same question that was asked of the Mining Association, because they testified that they buy a lot of their equipment there in Gillette. Gillette would love to sell those big Caterpillars and the big equipment. And that money, that velocity of money is going locally. Question to you on the oil and gas side. Is the equipment being purchased in Wyoming? And if this money were reinvested in equipment and supplies and people, would that money be stayed here in Wyoming?
Yeah, Mr. Chairman, again, I mean, the short answer is yes. But again, what we're talking about here is, around 400 companies right here. So not only is it reinvested in equipment for their field, it's reinvested in the kinds of things that they're interested in their community, other businesses that they do. One of my board members testified to your counterparts in the House committee. He has a different business at the airport in Casper, and whatever he can create and help to develop the airport there, he cares about Casper. So that's what he wants to invest in. So,
Thank you for that. Senator Ide had a question. I think then Senator Pappas will come back. We'll just go down the line. Senator Ide, you go first.
Thank you, Mr. Chairman. Just a question for the panel. I mean, I like Wyoming being on the map as being the #1 most competitive place to do business. And I like this as an avenue for economic development versus some government form. How do we stack up on other, energy-centric states, extraction, oil and gas, mining, as far as this tax goes? Just a quick comment on that, where we stack up to our competitors. Thank you.
Mr. Chairman, Mr. Chairman,
Mr. Obermueller.
sorry, I'm not sure. Actually, maybe Ms. Hartstreet can answer that. I'm not sure about this specific tax, how we stack up, but I'd be willing to do that as a global question about taxation in Wyoming for oil and gas extraction. We are among the most expensive, if not the most expensive, of oil and gas producing states in terms of our tax liability.
Senator Pappas?
Mr. Chairman, could
Oh,
I?
yeah. Mr. Vitale.
Mr. Chairman, Senator Ide, I would answer this. When you talk about competitiveness in Wyoming, we have a unique coal resource in Wyoming, but we are also competing with other states that produce coal. And one of the reasons why I think this particular bill and this particular part of tax relief is so, it's a perfect time for it. As I mentioned earlier, the demand for Wyoming coal is high. We can't get it to where it needs to go. We can't get it to our customers. And we don't get paid until the coal is on that train going to that power plant. When we can't get trains, like the situation is right now, we lost 50 million tons of production last year. That's about $100 million in revenue. And that's to the state of Wyoming, but it's also revenue to my companies. And in the competitive environment with, say, Illinois Basin coal, we're at a disadvantage right now through something that's not even of our making because we can't get trains. So this is a timely bill. This is timely relief, and it's appreciated.
Thank you, Mr. Detag. Ms. Harpstreet.
Mr. Chairman, Senator Ide, I did just send you guys over a white paper that the Tax Foundation has put together, and there's a lot of analysis and different ways that tangible personal property tax is applied on inventory, and then a broad-based tax that's applied. And you can see how we would rank if we took this off. I think it would drive investment. It would be a great incentive. And I believe Jared Walzak with Tax Foundation is online to testify. I can talk really in the weeds about that maybe for you.
Excellent. All right, now we'll go to Senator Pappas. He still has a question. Yes, he
Yeah,
does.
thank you,
All
Mr.
right.
Chairman.
Senator Pappas.
I'm not really opposed to this concept. I am a little conflicted about it. And I understand that certainly your industries have been paying their fair share of tax, more than their fair share of tax in the state, because our tax policy is certainly not diverse. But this makes it less diverse, right? So the question is, and I'm asking you folks, where do we get the tax revenue that we'll lose by not charging your industries, right? Or mine either. I mean, when I was in business, I had to pay personal property tax on my furniture and equipment and, my computers and my plotters and all that stuff. And I frankly thought it was a little bit, I knew I had some other competitors who didn't pay it. Somehow it was like a voluntary thing, every year you have to say, well, this is what I've got, and they accept it. I don't think anybody ever came in to look at me. And so some folks didn't. So it's inherently unfair. I agree. And if we could get rid of it, I'm okay with it. My question, however, is where do we get the funds that we're going to do? And the more exemptions we do and the more tax relief we do, are we driving us to a different type of tax system? Are we actually driving us towards maybe instituting a income tax or some other tax? I mean, would you guys want a corporate tax, corporate income tax? I don't know. I just know that as we start exemptions, and somehow we have to fund our state, we have to fund our towns and counties, that money's got to come from somewhere. And I agree, your industries have shouldered the load. I just, and I'll be a yes vote on this bill because I want to hear, you guys are all sponsors of the bill, but I want to hear what everybody else says on the floor. And so, because I agree, they've paid too much, but what's the alternative?
Let's talk trade-offs, gang.
Mr. Chairman, Senator Pappas, while I'm in no position to promote a tax ever, something that we've studied for a long time is Tax Reform 2000, and we all know our tax structure is inequitable. And to level the playing field, we need to look at a low and broad-based tax structure. And one of the best levers to pull on is the sales tax. Our sales tax has 50+ exemptions. And so, and while we don't support removing all and doing a peanut butter swipe of all the exemptions coming off, like one of the bills on the House side looked at doing, you need to look at them individually. And I think that'd be a great interim discussion of taking those exemptions one at a time, as pointed out by Tax Reform 2000. And there's money there that is low and broad-based.
Mr. Obermuller.
Yeah, Mr. Chairman, and I appreciate that, Senator Pappas. I think you've heard me say quite a lot that the inequality in our tax system is of great concern to us. It's of great concern to Wyoming, and I think in the previous testimony here, I was talking about the way that my association is looking at all of these property taxes. Is does it drive it further apart, or does it try to keep it as as close as is reasonable between what we pay and what others pay. So I respectfully disagree with your point that this makes it less diverse, because in fact, the lion's share of this is paid by oil and gas and mining. So in fact, it actually helps to equalize it a little bit by taking this away. Your point is well taken, though, that the revenue has to come from somewhere, and that those are policy discussions that you all are having this very session with regard to what to do about residential and how it's tied to commercial. So there is that impact here, right here in Laramie County on this particular bill for sure. So we'll be involved in that discussion. It's very important to us, is what I can commit to you.
Mr. Chairman, Senator Pappas, one last little comment that our organization has always said: we need to fix the roof while the sun is shining. We have a $2 billion plus surplus right now. That's a great time to really evaluate where we're at, and we have some time because we know we'll go back down and it'll be tough again. But this is a great discussion. I think all of us would love to be involved in the interim.
Thank you.
Thank you.
Any more questions? Did you still have a question? Oh, Senator French?
Comment later on.
Oh, okay. Well, with that, thank you. That was very informational. Ms. Henson, come on up. Welcome back.
Mr. Chairman, members of the committee, and Director of the Department of Revenue, I felt that the discussions today needed to be further explored as a tax policy, as a broad tax policy. We heard some comments related to the oil and gas industry, the mineral industry, and they're absolutely right. They're paying each of those taxes. But as policy setters, you also need to recognize in sales and use tax in 3915-105, you've got an entire area, A Romanet 8, about a page and a half of exemptions from sales tax for economic incentive. And the justification was, we're going to give them that initial exemption on sales and use tax because we're going to collect property tax. So in the broad picture, that needs to be at least considered in that discussion, whether it's in the interim. And to follow up with that, keeping in mind that, Senator Pappas, to your question about lost revenue, sales tax is distributed in no way, shape, or form like property tax. So even though we collect the same dollar amount and you make it a revenue neutral to the company, you need to identify those fire districts, weed and pest districts, all of those entities, schools, education, municipalities, counties, that the local government that rely on property taxes, because the picture with sales and use tax is much different. That is state general funds. So with that, I stand for any questions.
Thank you, Director. That brings up a good point about how the difference is in distribution and how we'd have to backfill that and maybe possibly get direct distribution back to the counties for that purpose.
Again, those are very important policy decisions, but it's just trying to, one change in tax structure doesn't necessarily, it isn't isolated. It has a broad reach. So thank you for your time.
Thank you for that, yes. Any questions for Director Hanson before she runs away? Okay. All right. Jeremiah. Welcome back, sir.
Mr. Chairman, members of the committee, I'm a glutton for punishment. Yeah, well, Mr. Chairman, members of the committee, I'm Jeremiah Riemann here on behalf of the Wyoming County Commissioners Association. As you probably imagine, we're opposed to this particular legislation. I might start my comments right where the director just left it off. And Mr. Chairman, I got the chance to show you this the other day, and I apologize, I don't have immediately at my fingertips the sales tax part of this equation. But one of the things that I showed the group that gathered on Tuesday morning was the tiers of property tax in the state. And by tiers, I made that up. And it's just categorizing the first 7 counties with the highest amount of property tax collections. The second tier would be the next 7 counties, and the last tier, the third tier, is the remaining 9 counties. And when you do that, those first 7 counties collect 72% of all property taxes in this state. And that totals just over 214 million. The second tier, so the next 7 counties, collect 20% at $59 million. And that third tier, those last 9 counties, collect 8% at just over 24 million. I've got similar data for sales and use tax, and there are a couple of counties that change in that equation, but it's a very similar thing. So the director's right. When we pull one lever here, it doesn't necessarily have a similar corresponding effect on the other side. And that's why it took so long to figure out the Madden formula and direct distribution on how to equitably try and move that money out. And some of my members, when that was first put in place, I think Mr. Obermueller called it his apology tour, because there were winners and losers in that equation as it comes forward. So, I will say that this is an important conversation that we should be having. I do think we need to think about what are the offsets, and those can be offsets to revenue, what is going to offset that, but it could also be offsets of responsibilities that might be happening at the local level and related to this. So we would certainly stand and support and participate in that conversation. I will say that, and you've heard this from a couple of the assessors, the impacts are going to vary widely across the state, but nonetheless, they're going to be pretty significant under this legislation. To put a fine point on it, and I think you heard from solid industry representatives that we certainly support in this state, but there are a lot of different entities that pay this particular tax. Some of them are under exemptions to sales and use tax and other provisions. One of those industries, one that we've been trying to court for a while and we're having some success, is the data center industry. Here in Laramie County, the only tax, or really the only major tax that one of our data centers pays is this particular tax. That's $5.8 million that goes up in smoke. And that taxpayer gets to live here exempt free on a lot of other things. So I think we've got to think about the implications of this beyond just oil and gas and that industry and the exemptions that we provide to some of these groups. And I will just say that particular company, I don't know if they're going to spend their money here, that $5.8 million. Number two, they are one of the largest, if not the largest, depending on the year, taxpayer in this county. So just some food for thought. Again, obviously we're opposed to this, but not opposed to the conversation.
Thank you, sir. Senator French.
Thank you, Mr. Chairman. Mr. Meeman, a question for you. Of the money that, what would it take to make the cities, towns, and counties whole? Right now, there's a distribution from the state of 105 million, I believe it is, to the cities, towns, and counties. What would that have to go up to, since the state has a pretty sizable surplus? What would that have to go to for direct distribution? Thank you.
Mr. Reeman.
Mr. Chairman, members of the committee, Senator French, just trying to do quick back of the napkin sort of math here. This bill, at least the fiscal note, indicates that local taxing authority fiscal impact in fiscal year 25 is $62 million. That goes up to 64 million in fiscal year 2026. Now, to be clear, and in trying to answer your question, about 17% of that goes to to counties. So that, I just tried to do the math on fiscal year 25. That's an additional $10.5 million per year. This funding, about 2% of it generally across the state goes to municipalities. So you'd have to take that calculation. Under direct distribution, we don't send money to our schools or to special districts, so they would be left out of this unless you created a new equation to compensate them.
Follow up?
Thanks, Mr. Chairman. Right now, everybody out there, the cities, towns, counties, collect the sales tax and then send 100% to the state. Then the state gives back, I believe it's 31%.
30% or 31% minus 1%, 30%.
30, is it 30? If we change that to actually 31, what would that do? What's that dollar amount? Do you know that if we change that, then that amount of money is going back out, that 1%?
Mr. Chairman, right on the spot here, Senator French, I couldn't get you that number, but I suspect by the end of the next hour, I could have that number for you.
Okay, thank you.
Thank you.
Quick question.
Yeah, Senator Hyde.
Thank you, Mr. Chairman. You mentioned that data center here only paying 5.8, and that's the only tax they pay, is the personal property tax. How come they don't pay any other taxes? Is property taxes, can you explain that? Thank you.
Mr. Reman?
Mr. Chairman, I'm not going to be able to discuss all of the taxes that they might be subject to, but they are subject to an exemption for equipment under our sales and use tax statutes and perhaps other exemptions for enticing them to come into our communities.
Senator Pappas?
Thank you, Mr. Chairman. I think what Jeremiah brings to us is why I'm conflicted. I think that I'm good getting rid of it, but I need to see the alternatives. I need to see counties and cities, and if we're going to lose 5.8 million here in this county from one employer or for one taxpayer, I want to see how that's going to be. Yeah, how are we going to make that up? And again, I don't know what I'll be like on the floor, but I think somehow in order for this to be palatable, that has to happen. We have to figure out that and as Ashley mentioned, certainly we have all these exemptions and all these other, my industry was exempt too from sales tax, architecture, and a lot of professions are. And frankly, I agree, we need to remove all these exemptions. Can't do that in this bill. The bill title won't allow that. But, if we need to bring, and we as a revenue committee need to think hard about resurrecting all the work that was done back in that report back in whenever it was, 2020 or 2000, yeah, and revisit that and come up with a better system, because they did all that work and then we just shelved it, and as you can see, we're still in the dilemma. But I am conflicted. I think we need to do something to take care of this. Those dollars need to come from somewhere, and they need to go to the folks that are losing it. And so, again, not a question for Mr. Reman, but
I can probably turn it into a question for you.
question for us, I guess.
I'll take that and just ask you this, Mr. Reman, based on what Senator Pappas's concerns are are you saying the Madden formula doesn't take into account all of the different revenues or the distribution streams that we would have to backfill to replace this money? Does that make sense?
Yeah, Mr. Chairman, I don't have the MAD formula directly in
Right.
front of me, but it does try to account for various funding streams and how those are distributed. What I was trying to convey is that direct distribution only goes to cities, towns, and counties. And property tax on a whole goes to a variety of other entities beyond just those three.
Mr. Reaman, as a follow-up with that, if it did go to the counties, would the counties be able to further distribute that money the way it would have gone? Say this bill were to pass and go through and be signed into law, and we did a direct distribution in the budget, and the money came to the counties, would the counties be capable and able to basically make those entities whole through that direct distribution pot of money?
Mr. Chairman, there might be a few laser eyes on my back and maybe out in
I don't see any
the other
yet.
world because
Yeah.
my commissioners are not the ones that have to pull those levers. But I believe ultimately it would be no different than us distributing property taxes. And from that perspective, I don't think it's going to be a tremendous burden. Obviously, we know what those distribution amounts are at the local level, and depending on how it was appropriated, should be able to do that.
Okay, thank you. Sorry to keep you so long. Anybody have any questions? Okay, thank you, sir. Okay, who's next? Oh, boy. Oh, boy. Welcome.
Thank you, Mr. Chairman. Ken Gill, Laramie County Assessor. Just kind of clear a couple things up. The question from Senator Ide, is that the only tax that Center pays? No. They also have real property, land, buildings, et cetera, and are expanding greatly in this community with 2 more campuses. So no, they're pretty large in our community for sure. The other thing, just to remind, when we exempt something, we're shifting a burden. So in Laramie County, we have a countywide bond that was voter approved. So we're now shifting that to the parties that are not exempt. And we also have a smaller bond in one of our fire districts. And that, I don't know if it would really shift in this case, but it will shift some in that area. So we are shifting to the other taxpayers that are not exempt. And with that, Mr. Chairman, I would stand for any questions.
Any questions? Thank you, sir. Mr. Moline.
Yes, I am.
Oh, boy.
Mr. Chairman, Brett Moline, Wyoming Farm Bureau, sitting firmly in favor of this bill. This does affect my members. We do have to pay the personal property tax, as I'm sure Senator French, on all of our farm equipment, other equipment that's not tied to the land, so it is considered personal property. You know, it's not hard for a lot of my members to have over $1 million worth of investment just in equipment, and paying the taxes on that. It's a hindrance to our business. But in a general overall sense, one of the biggest hindrances to private investment is when you take a portion and give it to the government. It's not that we don't want to give anything to the government, but typically an investment in the private sector is much more productive than an investment into government. You know, part of this is going to get offset by that money that you're putting back into the consumer's pocket. Some of that's going to get offset. You know, the households, some of that money is going to go to households. Many of the things they buy are taxable, such as vehicles. They'll pay the sales tax. I realize that's not the same as a property tax. But, you know, but that is going to go to households that are going to in turn generate more economic activity. But looking at, you know, using my family as an example, a ranch up in northeastern Wyoming, one of the things we're going to invest in is things that are taxable through property tax, through real property, such as building more sheds, barns, those are tied to the land, so they're real property. Those will be taxable. There will be an investment in that. Will it be enough to offset the taxes that we're paying on the personal property? I can't answer that. But at least, how much is it going to be offset? I don't know. But at least, I would guess at least a substantial portion of what's being paid by my industry in the personal property will be offset in taxes, either through sales tax or other property taxes. If we buy a vehicle, that money is distributed back just the way other property taxes are. With that, Mr. Chairman, sitting firmly in favor of this bill, I would sit for any questions you may have.
Any questions? You good? Well, I got one for you.
Yes, sir.
So, not a lot of people, I don't think, pay this tax. And I would venture to guess, probably don't even know it exists, especially some smaller farmers and ranchers out there that may not know this. They even have to pay on their personal property. Could you venture a guess as to how many of your members are actually paying this tax? Or, I mean, obviously the honest ones are, like the good Senator Pappas, he mentioned he was the honest one in his business, but there may be some that don't pay it. There's really no way to enforce it because we're a self-reporting state. Could you venture to, obviously it's not 100%, so does it go back to that equity issue to you?
Mr. Chairman, I absolutely have no idea. What I have done is periodically we have a monthly newspaper that goes out to the Wyoming Farm Bureau Federation members, and I have put articles in there. This is a requirement by law. Might not like it, but it's a requirement. How effective that's been, I don't know. But I would venture a guess that I would guess at least a strong majority of the producers do pay this. It is probably the smaller ones. It's like any other business. If somebody has a home business and they have one desk.
Yeah.
So I would, if I put on the spot and I had to venture a guess, I would say a strong majority do pay the tax.
Okay. Senator French?
Thank you, Mr. Chairman. Yeah, I don't know any farmer that doesn't pay that. I mean, your assessor sends out once a year, any additions to your personal property here, and so you list it if you bought a disc or, and the purchase price of it and blah, blah, blah. And, I've been paying on farm equipment for 49 years. Every year I pay on it. And, so I would say that number is minuscule. I mean, they're sent out that notification, and if they don't follow the law, and they come around every, 5 years, and they check, and I see you got this and that, and I'm like, you didn't list that? Okay, we need to sit down and talk. So,
Mr. Moline?
Mr. Chairman, Senator French's comment reminds me of another point. Part of the problem, and there's no easy fix to it, but equipment is based on its market value, or on its replacement value, excuse me. It's valued on its replacement value. So my 1960-something John Deere 4010, it's approximately 80 horsepower. They know you have that. They look at the replacement value of it. To replace that tractor with a current tractor is going to be a lot of money, well over $150,000. On a tractor that's market value is probably 10, 15,000. It's gone up in recent years for several factors, but that's part of the problem. We're paying on the replacement cost rather than market cost, like we do with other more depreciated value on some of the buildings and such. To their credit, I don't know a better way of doing that. There's not a Kelly Blue Book for vehicles. There is one for vehicles. You can come up with a pretty good estimate of what a 1968 Ford half-ton pickup is worth. There's not a good source for a 1968 John Deere 4010, diesel, gas, et cetera. I don't know a better way, a system to do that. Well, the best solution is just eliminate it, remove that headache on the county side and on the producer side. With that, Mr. Chairman, I would sit for any questions you may have.
Thank you. Anybody else? All right, let's move along. Thank
Thank
you,
you.
Mr. Moline. Anybody else in the audience wish to testify on Senate file? I forgot already. 110. Seeing none. Is there anybody on Zoom, Judy? Oh. Okay, bring in the Tax Foundation. Jared, if you're there, turn your camera and your mic on and let her rip. Can you hear us?
Yes, sir, I can now.
All right, please proceed.
Thank you, Mr. Chairman, members of the committee. I'm Jarek Walzak, Vice President of State Projects at the Tax Foundation. I appreciate the opportunity to testify very briefly on this bill. You've heard a lot about effects on particular industries and some of the discussions of why TPP taxation is not ideal. I just want to bring it back to a few of those principles and a few of those reasons. Tangible personal property taxes reduce capital investment by making it costlier to invest, and particularly to put new and more productive equipment into service. In addition to the actual tax burden, as you've heard multiple times, TPP taxes impose substantial compliance and administrative costs because the tax is what we call taxpayer active. Businesses have to fill out forms identifying their property. Some of this is going to be identified to them. Some of it they will have to identify on their own. They have to detail relevant attributes, including physical description, year of purchase, purchase price, identifying information like serial numbers, and they have to remit this on the depreciated value of each article of personal property. This is a significant compliance burden compared to most other forms of taxation. It creates a lot of inefficiencies within equipment and machinery decision-making. Sometimes it can preference newer property. Sometimes it can preference older property. It depends on what sort of property you're purchasing, but it is putting a thumb on the scale frequently. It can often discourage new investment because new undepreciated equipment has higher taxable value than older equipment. But as you've also heard, there reaches a point at which much older equipment is actually overvalued compared to what really it probably is worth, because there's just a limit to how far property can be depreciated. And in some cases, you might be using replacement value, as previous testifier mentioned, that really is not indicative of the value of the property. So whichever direction it is, it's not really the market driving the decisions to some degree. It is property taxation leading the way. Now, you're not unusual in taxing TPP. 43 states do include tangible personal property in their tax base to some degree, but most do so less than you do. 31 of those 43 states have meaningful exemptions. You do not. You have a $2,400 de minimis exemption, but that is about it. Many other states have much more significant de minimis exemptions or exempt significant classes of property, especially in areas where they're looking for significant investment or have major industries. Internationally, most countries have shifted away from taxing tangible personal property. There are 38 countries in the OECD. Of those, only 7 tax any form of personal property. We're, of course, one of them. So 6 others out of the remaining 37. There are a number of things that states have done short of repealing TPP, including generating meaningful de minimis exemptions. Yours is both extremely low at $2,400 in aggregate, but also, as was mentioned earlier, still requires active taxpayer participation. It's still necessary for a taxpayer to file an informational return, so there isn't a compliance cost savings there. In some other states, there are no obligations to file if you are clearly and sufficiently below a threshold. Now, 2,400, there just aren't a lot of people, who have property that might be subject to this that would be exempt. But if at some point the legislature chose not to exempt all TPP, which we do believe would be the ideal policy, but to create some meaningful de minimis, it may make sense to eliminate the reporting requirement if a taxpayer is, reasonably and obviously going to be under that threshold. Connecticut looked at this a few years ago. They noted that with a $10,000 exemption, they would eliminate liability for 46% of their taxpayers at a cost of less than 0.14% of all revenue. If they set a higher threshold, much higher, talking like $200,000 in assessed value. That would exempt 93% of filers in the state while retaining 89% of the tax base. Again, this is not the best approach because this is a bad tax. This is a tax on investment on movable equipment, which should not be taxed. But from a compliance standpoint, there are also a lot of things you can do to take many of the smaller property taxpayers off the books and eliminate those compliance costs with very minimal cost to localities. Because TPP is by definition property that can be touched and moved, it deserves to be considered differently than real property. Both because it doesn't really make sense in terms of a benefits test, which is how we usually think of taxation. The value of your land to some degree is commensurate with the services you receive from government. That's not really the case with your TPP. But also these are things we want to encourage. Your land is a fixed asset. Your investments are something that states want to see more of. And in many cases, they're taxing in other ways as well. There's been mention of the sales tax and whether it's properly and adequately covering some of the things that are currently taxed by TPP. Of course, ideally, a sales tax is a consumption tax on final consumption. So a lot of these things are being taxed under the sales tax. Machinery equipment is being taxed under there that in an ideal sales tax wouldn't. Now, I'm not saying go get rid of that. I know it's an important source of revenue, but in this question of are we taxing it enough, you're actually taxing it in a way that almost any public finance scholar would say, we'd prefer you not to. This is economically inefficient. So taxing it in some cases under both streams is doubling down on that. Recognize this is an important source of revenue, but also recognize that right now there is significant revenue growth for state and local governments. And if there is an opportunity, this would be a great chance to join the states that have eliminated it entirely, or at least to move in the direction of the majority of states that have reduced their reliance on tangible personal property. And with that, happy to stand for questions.
Thank you, Mr. Walzak. Any questions? I have one. The burning question of the day seems to be how to offset this and what the economic impact of a sizable tax cut like this would have on the economy. Do you have data from these states that have done this, that have repealed or exempted broadly TPP, and what kind of activity happened after that and where the velocity of money went? Did it increase sales tax revenue? Did it stay the same? Can you give us some real world examples of what you've seen?
So Indiana is a good example of a state that largely repealed its TPP taxes. It still has a little on the margin, but got rid of much of it and saw significant economic growth. Now, the challenge is they did a couple of good things all at once. So it is difficult to tease out what's TPP, what is something else. Ohio is another state that actually fully repealed TPP and saw significant growth, but again, did it in concert with other changes. It's difficult to say what did TPP do in its repeal and what did other changes in business taxation do, but their packages substantially increased business activity. Both of those states saw robust tax revenue growth. I'm not saying it's all attributable to that, but they have both done well compared to where they were previously. This is not to say that you are going to replace the revenue if you repeal this. I think we're talking about $90 to $100 million a year. I think it's about 92 million in the first full year. And that is a real loss. And while there will be additional sales tax activity, I'm not here to tell you that it will be 92 million then or anytime in the near future. The question is, in my mind, whether given the increase in property tax assessed values and the collections that local governments are getting, whether you can afford to use this. I mean, there's talks about lots of different limitations, different approaches, whether you can reinvest this in economic growth, recognizing that you will get some of it back, but probably not all of it. Some states have used state revenues to offset, where they have provided some sort of additional aid in their local grants to offset reductions in TPP. West Virginia's looked at doing that. Louisiana has done it. Others, I think South Carolina has done that in their reduction, but not elimination of reliance on it. It is always an option, but you may also, whether at the state or the local level, have some of the growth to help offset this.
Thank you, sir. I really appreciate that. Any other questions? Okay, I see none. Thank you, sir. Thank you for waiting and all your information.
Mr. Chairman, we have one more person online that has their hand up, Pat Meyer.
All right. Mr. Meyer, welcome. turn on your camera and your microphone, please.
Mr. Meyer, you need to turn on your microphone.
Nope.
There we go.
Oh, I was about ready to pull the plug on you, sir.
Okay, well, thank you. Pat Meyer, Park County Assessor. Talking because I actually did a big study back in 2020, as you know. I just want to go over a couple of things that had happened. In 2019, the tax dollar amount was 134,630,548. Out of that, there were 38,441 personal property accounts. Out of that 38,000, 6,000 of those accounts paid 96% of that tax. So it's basically paid by industry, are paying the whole share of it. I never liked the tax, just like a lot of you have testified. It's not fair, it's not equitable, and it has really little to do with market value. When I was doing that, we had a bill that was going to exempt the 35,000, first 35,000 for everybody. And that would have got rid of well over half of those 38,000 people would have never been able to get that much money. But that bill tied on the Senate floor, it didn't work out. It can't be a fair tax when it's self-reporting. Personal property, when you are reporting that tax, you're supposed to be reporting installation, shipping. It's all part of it. I kind of doubt we ever get that. To audit all these small people that are paying this tax wouldn't be very cost efficient at all. So we're stuck with it. As far as fair market value, we use a legitimate system that's fair, and the Supreme Court will hold up to it. It's just a good appraisal system, but it's basically they report it to you, we trend it up, and we depreciate it down to 20% good. And we're calling that fair market value, which it really isn't, but it is a legitimate approach. Myself, like all of you, is how do you replace the 134 million? And it looks like it's up from there. In 2018, it was 125 million, and the 5,000 people paid 95% of it. Those are people who pay over $1,000. People who pay over $100, there was 702. People who paid less than $15 were 7,184 parcels. So this is statewide, of course. So there you have it. And I would take any questions. I just thought I'd give you that information. I, like you guys, I feel the same thing. How do you replace this tax?
Thank you, Mr. Meyer. Senator French has a question for you.
Thank you, Mr. Chairman. Good to see you, Mr. Meyer. My question is, if this bill goes through and the personal property is tax is removed, but yet the county assessed valuation goes up 5 or 10% a year, is that alone's going to erase much of this, isn't it?
In Park County, that's very possible. Sorry, Mr. Chairman. Mr. French, in Park County, that's real possible because we are escalating so much right now. You know, we averaged 20% or 25% last year, but it was really 25 to 45% increases. And we're going to be receiving them again this year at 25 to 45% increases. So personal property for Park County is not as big as what you've heard for other ones. I believe we could live off no personal property. And there's a lot of other counties that have very little personal property. The only personal property that makes a big difference in Park County is the oil and gas equipment. And they are the best reporters. That industry reports good. And we have audited them, and they report accurately, but they have regular companies that's all they do is report their equipment, and they are good reporters. Where some people, they get away without reporting. We don't catch everybody. And even if we did, as I was saying, to audit these small people, it just wouldn't make any sense to go out there. So we just have to take it. And that's what makes this tax unfair. And you'll see a lot of states have gotten rid of it. How they supplement it from, that would be a study on what are we going to do and which counties is it really hurting?
Thank you, sir. Any more questions? Seeing none, thank you, Mr. Meyer.
Thank you.
Judy, is that it for Zoom?
No, Mr. Chairman, we have Betsy Hale who would like to speak.
Okay, Ms. Hale, please introduce yourself.
Oh, good afternoon, Mr. Chairman. My apologies, sir. Good afternoon, Mr. Chairman and members of the committee. I'm here today just to clarify some questions that came up during the committee meeting today, and that's regarding the data centers and taxes paid, et cetera. Several of you on this committee have heard me testify on the significant economic impact that data centers and cloud computing companies that have had in Wyoming since 2013. Please allow me to update those numbers for you. Since 2013, 4 of the 7 data centers in Laramie County have contributed over $100 million to the Wyoming GDP annually. They have invested over $2.4 billion in capital, and we expect another $2 billion to be invested in the next 3 years. They have paid over $49 million in business and real property taxes. Sales taxes paid on power are more than $20 million, and their 280 plus jobs pay over $80,000 in average annual wage. Cheyenne Leeds is currently working with 7 data center prospects, and we currently have 2 Microsoft data centers yet and have not come onto the business personal property or real property tax rolls. So those numbers that I shared with you will only go up. As you heard from the speaker from the Tax Foundation, the attraction, retention, and expansion of data center operations in Wyoming is no easy task. Due to their large capital investment and economic impact, there are 16 states which offer investment tax credits, 15 offer property tax credit abatements, 14 offer withholding tax credits, and 31 other states offer sales and use tax exemptions on the equipment. So I share those numbers with you not to encourage you to vote yes or no, but so that you have data that actually was just prepared this past week by the University of Wyoming with information from the Laramie County Assessor's Office. So would also just appreciate your consideration of the impact that these companies have. I'm sure that they would love to not have to pay taxes, but I also know that the companies that I'm speaking about understand they need to pay their fair share. And so I look forward to further conversations with you and bring them to the table to see how we can address some of the tax challenges that we have here in Wyoming. So thank you, Mr. Chairman. I'll stand for questions.
Thank you. Any questions? Could you email the committee those numbers that you just presented?
I absolutely were, sir. Thank you so much.
Thank you, and thank you for your testimony. All right, anybody else on Zoom, or are we done?
No one else on Zoom.
Okay, public comments closed. Committee, what's your pleasure?
I'll move the bill. Second.
Moved and seconded. Discussion on the, actually, are there any amendments on the bill before we discuss this bill? Any amendments?
Mr. Chairman,
Senator McEwen.
I think we should bring back the language that is scratched out and replace any with real.
Okay, I'll second that. So reinsert stricken language on page 2 and replace the word any with real.
Yes.
1 through, I'm sorry, Mr. Chairman,
Mhm.
lines 1 through 4? Or
Yeah, all that stricken language would be reinserted.
real, added, okay.
Delete any, add real. And and the grammatical correction. Yes, any discussion on the amendment? Question? All those in favor, say aye.
Aye.
All those opposed, no? Okay, it is passed. I was an aye. I didn't mean to say no. Any other amendments? Any other amendments? Discussion on the bill.
Yes, Mr. Chairman.
Senator McEwen.
I just want to finish up before we vote. This is a chance we're not going to see for a long time in the future. I think the word was fix the roof while the sun's shining. We, over the next 2 or maybe even 4 years, are going to have extra, I think $2.68 billion extra in just property taxes alone. Am I correct with that?
I'm not sure, Mr. Senator.
It's pretty close to that.
It's a lot of money.
That gives us time to revamp some of the tax code and the tax structures. That gives us time to find the replacement funds for that, because we're going to be flush with just regular property tax anyway. It will allow us to develop a system that's way more fair and doesn't lean on our primary industries so hard. It's also going to do a lot to drive our economy. It's going to make taxes more fair, more transparent. It's going to take a lot of burden off small businesses as well as large businesses, because I do all the paperwork also. And I put serial numbers and everything on there. And I'm not sure 90% of the information I put on the report that's due by 1 March is even used, other than $10 or $100. So as we look forward to this, I know if we can get this passed, we as a revenue committee have a lot more work to do on some of the exemptions. But I believe this committee is more than capable of figuring that out and cleaning up some of the exemptions. And it'll give us a chance just to see what the economic growth is also, while we have the excess and the surplus, and have the chance to do away with this, what I started out with, horrible, rotten, terrible, nasty tax. Thank you, Mr. Chairman.
Any other discussion? I guess I can second that. This is probably one of the worst taxes, if not the worst taxes on the books in Wyoming. But I would also tell my committee members, we're gonna have to roll up our sleeves and get to work. We can't just pass this and not look at our exemptions. We can't just pass this and not look at distributions to our county and how this affects, like the good director said, if you make one policy change, it's going to distort other areas of our tax code. So we've got to get to work. Our interim's going to be very busy cleaning up these tax codes. This is a pro-growth bill, and it's fair, and I think it's the right thing to do. So I'll be an aye on this bill. If there's no more discussion, let's call the roll and dispense of this.
Senator French,
Aye.
Senator Ide,
Aye.
Senator McEwen,
Aye.
Senator Pappas,
Aye.
Chairman Biteman.
Aye.
Mr. Chairman, there were 5 ayes on this amended bill.
Okay, that Senate File 110 has passed the Senate Revenue Committee. Next bill up is Senate File 101, Legal Tender Act Amendments. Well, I feel bad because we laid this one back, and we had people that really wanted to testify on this bill. Say we get it today, I think we can get through this, and we might be a little late getting back, but we're gonna get really bogged down if we don't get this bill out of here. So, what's that? Yeah, we'll limit our discussion. Let's try to be brief on this, and we'll go ahead and work this bill. So next bill up for our consideration is Senate File 101, Wyoming Legal Tender Act Amendment, sponsored by Senator Ide. Senator Ide, the floor is yours. Please walk us through the bill.
Thank you, Mr. Chairman, members of the committee. I'll make this brief since we're short on time. It's a pretty simple bill. It's everybody left that I wanted to say it to today, that we can start paying our taxes with gold and silver with this bill if they want to pay taxes in gold and silver. Anyway, this was spawned from the Wyoming Legal Tender Act that was passed in 2018 that essentially just reaffirmed our U.S. Constitution that gold and silver is really the only thing that the states are supposed to be collecting debts and taxes with. And it primarily took care of the taxing gold and silver. So this is an amendment to that original Wyoming Legal Tender Act of 2018. So I'll just read through these talking points real quick. So summarize what's in this bill. Article 1, Section 10 of the U.S. Constitution states that no state shall make anything but gold and silver coin a tender in payment of debts. Pursuant to this, states can create payment mechanisms for accepting and remitting taxes and other payments in gold and silver. By creating the infrastructure required for Wyoming to collect taxes and make payments in gold and silver, citizens and the state government itself would have an alternative means of savings and payment at a time when the decline of the Federal Reserve note, that we call the dollar today, appears to be accelerating. Senate File 101 gives the state treasurer the tools to deal in monetary metals so the state is better prepared to protect itself from inflation and financial turmoil. Senate File 101 builds upon the Wyoming Legal Tender Act of 2018 that I just mentioned earlier by giving the state treasurer the ability to use and accept specie and specie legal tender, which is defined in the Wyoming Legal Tender Act. A lot of people, aren't familiar with that, but essentially specie means coin having gold and silver content, just to keep it brief. The state treasurer is tasked with determining and maintaining real-time currency exchange rates between specie and specie legal tender and other currencies consistent with precious metals, with the precious metals industry standards. Senate File 101 would also permit the treasurer to hold a portion of state funds in physical gold and silver, and if market conditions warrant, the treasurer could invest in precious metal leases or bonds payable in precious metals. Lastly, SF 101 allows the state treasurer to hire experts upon thorough vetting to assist the state treasurer's office in its activities, including secure storage of precious metals and determining market rates and other things that the treasurer sees fit. Kurt Meyer, our treasurer, I've talked to him about this at length. He's in favor of this bill. He was going to try to testify today just to let everybody know that he's in favor of what we're doing here. Just for anybody watching online that may be interested, just to kind of give you a little something to tell you why we're doing this and why it makes sense for the state to protect ourselves from sovereign debt crisis or turmoil. Gold and silver is more of an insurance policy. It is an asset class. It is money. JP Morgan testified in front of Congress back in the early 1900s and said, gold is money, everything else is credit. And that's a pretty easy way to sum that up. There's an old saying that an ounce of gold can buy a decent suit. When gold was $20 an ounce back in the early 1900s, that would buy a very nice suit. Today, it is nearly $2,000 an ounce, and gold will still buy a very nice suit. You probably buy a pair of shoes and a belt and a couple of shirts to go with it. So, what's going on? This is kind of a prime time, like we were talking about before. We've got opportunities with this previous senator's bill that came before us. I mean, we're suffering the ravages of inflation right now too, and this is a protection for that. And our founding fathers saw that when they made gold and silver our money. They saw the ravages of inflation during the Revolutionary War and even the Civil War, when the greenback just ended up being worthless effectively. So with that, I'll ask for any questions.
Well, let's, is there anybody from the agencies? I see Director Henson's here. The rest of our audience left us, but Director Henson is stuck with us, so thank you.
Mr. Chairman, members of the committee, this bill specifies that taxpayers can pay taxes. It's very general. It doesn't state what type of taxes, but as the agency that invoices, collects, sales and use tax, we collect cigar tax, mineral tax, all of these taxes, but keeping in mind, we don't keep any of the tax. So it's remitted to our agency, and then we're required by statute to distribute those dollars to all the taxing entities. And some of them remit to us on a quarterly basis, some on a monthly basis, some on an annual basis. And so the question that I have when we accept the gold or silver, exactly, is it acceptable that we at that point convert that to US currency to satisfy that liability of a US dollar, because that's how the billing is done. And then we can maintain it as a US dollar so we can distribute it to all the taxing entities, because as you know, we all have auditors and all of those dollars have to balance to the penny. And I would state that county treasurers that are also collecting tax are in that same boat. They collect the tax from the property owner, but then they have to distribute it. They're not keeping it. So just some conversation on the administrative aspects of once we take it as payment, then what?
Thank you, Director. Any questions? Or Senator Ide, do you have a comment on that, or do you want to take some more questions first?
I could try to answer that question. I think there's a lot of things to be determined once this gets in place. The treasurer could probably comment on that better than I could, because he's the one that's going to have to deal with it. But it's like anything, I think. This is to get it started, figure out a lot of the details as things start getting implemented. There's Grisham's law that it probably won't get used a lot right now, just bad money drives out good, so people are going to be holding their gold and silver. But this is a mechanism if we don't have anything to collect. If the U.S. dollar or the Federal Reserve note is worthless, the states need something to transact in. Thank you.
Thank you, Mr. Chairman. Thank you, Senator Ide.
Okay, let's start down here with Senator Pappas.
I have a question. Your dilemma about how, when we collect it, how do we convert it and how do we distribute it? And I don't think actually the treasurer will be collecting any of this at all. So just because he agrees with it, I really want to talk to the people who are collecting it. And unfortunately, a lot of them left, but certainly, because you said the counties and the cities and they're going to be collecting this. What is the administrative impact? I mean, if somebody walks in with a couple of ounces of gold, what do we got to build safes? Do we got to do we have to have another FTE to? I'm sure they're going to have to go get trained on how they're going to do the conversion, and when they do the conversion at that moment, they're going to probably have to somehow get rid of the gold to somebody, right? Because they're not Fort Knox. They're not going to be storing it in their bank vault. But if it takes a day or two to get rid of it, if some armored vehicle comes and picks it up and takes it off to somebody, the conversion rate is different 2-3 days later. Are they going to be able to charge whoever brings that gold in a service fee to do this conversion? I mean, I see administration as a big problem. And it's probably not going to be used very much, I don't think. And so we're gonna create all this administrative work for, maybe it's not used at all. I don't know. I mean, I see administrative problems. I see where you're going with this thing, but I just see it as a problem for our towns and counties and all the people who are collecting this tax.
Senator Pappas, well, Treasurer Meyer.
Were your ears burning?
Treasurer Meyer, welcome to the Senate Revenue, sir.
Good to see you guys.
Thanks for being here.
Okay.
So we were talking about how, we had a few questions on the impact of collection. What about conversion? What if the rate fluctuates? Who stores it? All that jazz.
Yeah, we kind of talked about this with my investment crew, and it probably doesn't surprise you that I've got a couple of gold bugs in the investment crew there, you know, and myself included. And we're looking at some of the areas that we looked at that we'd have to prepare for. And one of them is trying to figure out the normal course of commerce, and we make sure that we don't have any counterfeits that are out there. And they went through all the different ways that they knew people counterfeited gold. One was stovepiping it with lead, and you had to put a radio wave through the bar to bounces back at a different rate. Another one was where they had different alloys to it to kind of water down the product. Some of them they do right away, and they're like Cougarans. I guess they're 10% copper, but they add more weight to the coin, so you have you have the ounce. And we have to kind of figure out, where exactly what kind of gold is going to be traded in commerce, and try to make sure that we, protect both the state from, having those under deposit, and then also protect the consumer. And so those are challenges that we have. And I don't think any of them are insurmountable, but they're all going to, carry a cost of, compliance and security. Then some of the other areas that we looked at is we have Bloomberg, and so us, the in-house, we can get the price of gold. But when we start, I guess supplying it to the public as far as on a website or something, then that takes a different subscription with Bloomberg. And so we don't know what that particular cost would be on that subscription. And I can get you, I'll get a price of what we pay for Bloomberg just for what we use it for. And I've asked staff to reach out to Bloomberg and find out what it would be if we put it on the website, so people could see. And then we have to make sure that, if we take something in and we have have to have a vault or some security. I think the only vault, and I think Senator Ide, you probably know better than I think it's in Utah, isn't it? The first, the closest vault that's really in Idaho. Yeah, so, we'd have to see what the rental agreements could be on that, whether they have those security systems that we're talking about if somebody wants to bring in large amounts and pay for some, large amount of taxes and different things, so that's something that we'd have to look at. I think that, any of that's available at a price, but getting that price to find out what it is, may take some time, or we may be able to get it in a relatively short time in some circumstances. Then it's making sure that as the price of gold fluctuates, as it does, that one of the things that gold traders do is that they have a bid offer price. And so, those always vary. There's always a spread on it. So the person buying it is always buying it, the state would be buying it at a lower price than necessarily what we might be able to sell it to somebody else for. So you kind of protect yourself for somewhat for the market. And then you also have to have some spread to account for your transactional fees. That's going to be present in those circumstances. So, there's challenges in that regard in different areas. We'd have to put a business plan together and make sure that, whatever we do, we make sure that we do it with safety, security, and we do it with enough margin that we don't get ourselves behind the 8 ball. Because at the end of the day, we're trying to protect the taxpayers. And that's, what I think these things are all about. I think the bill is totally legal from that standpoint. I don't think there's a constitutional problem with it, because I think that you can have golden species. We might even look at what the cost would be if we actually minted our own Wyoming coin, because I think that we can do that legally. And I know there's the other things that are out there. There are the gold bucks, and those have there's a spread between I think the price of the value of the gold and the actual market price of those right now. And so what I kind of struggle with is that I don't know how to price the medium that the gold is sprayed on, and whether or not we can actually guarantee that markup, for that process. A lot of it is, there's some of it, I think, that's in commerce in different states, and I think that Senator Ide can speak to that better than I can. And so I think there is a value that's in some marketplaces, it's actually determined. Whether or not, if we get to a situation where we are, taking in hundreds of thousands of dollars worth of that particular medium, whether or not we'd be left with a lot of plastic and not as enough gold at that market price that was determined. So the only thing that I know that I can guarantee, is the price of the gold that's actually, whether it's 1/1000th or 1/100th or whatever on those gold-backed notes. So, but yeah, they're a beautiful product. My wife is trying to get me some of them now, so from that standpoint. And so, so from, those are the things that, not necessarily concerns we have, but challenges we know that we face in the implementation. And it's a different thing if it's in general consumers. I think it would be hard, for a dry goods store to make a determination as to whether these things were counterfeit or not counterfeit. And I think there's a time period where somebody would pay their taxes, and they may or may not know that they may be unaware if there are some problems with the material that they're submitting to pay their taxes until we actually discover it. And you would have to, really go through the process to make sure that everything was right, and what you were getting is what you were expecting to get. And probably make some rules to make sure that we accepted, a type of medium that was verifiable, in all circumstances. Because there's the folks up in the office that had to do a lot of trading personally, they say there's a lot of difference. There's like, if you trade a lot of gold, there's like a 5% commission. If you only trade a little bit of gold, there's like anywhere from a 7 to a 9% commission. And so, that's a lot higher than a bid offer spread. So we need to figure out, what is reasonable. I don't think a taxpayer would that owed a lot would actually, I guess, sell us his gold at a lower price than he could sell it someplace else. So it's a market value thing. But on the other hand, that we got to find out a market for our gold, to sell, to get back, exchange it to dollars, so we can pay our bills. Because, that's there's probably a lot of people out there that's the state's customers and the county's customers and the town's customers, and necessarily don't want to have a gold bar or a gold coin. They'd rather have just an item on their account, and do an electronic transfer. So, it has some challenges, but I think in different limited areas, you could probably make it work. We just got to figure out what the process is, and to make sure that you know, the consumer's protected, the state's protected, and the taxpayer's protected.
Senator Pappas?
Thank you. Thank you for that great explanation, Treasurer Meyer. I have a couple of questions for you. First of all, you know, this is for payment of state and local taxes, and those are collected not by your office.
Right.
And so first question, would every entity, including the state who collects sales taxes and the local folks who collect whatever taxes they collect, counties and towns, would all these people have to have a subscription to Bloomberg? Or is that something that they can piggyback off your subscription? Second of all, who do you think would pay these taxes in gold? I mean, if we're gonna, my tax bill's coming in dollars, okay, now I gotta figure out how much gold I gotta bring to you or to whoever I'm paying taxes. And then I'm gonna sell it at a lower price because we want to cover our expenses. I can see huge administrative expenses, huge, including the technology to make sure it's not a counterfeit, right? And by the way, that technology is not in one location. It's going to be in the county clerk's office. It's going to be in you know, whoever takes his taxes. So it's going to be all over the state. We've got to have this technology everywhere so that they can, if they're going to take gold, they got to make sure it's not a counterfeit.
Yeah.
And then we're going to convert it to dollars again. I mean, why would I even, as a taxpayer, even do that? So is anybody in your mind going to ever use this? Thank you.
Treasurer Meyer?
Okay, I'll try to answer those. I would think that we would, as far as the Bloomberg question, is that we would probably have that on our website, and that was something that people could rely on, and there'd be one subscription fee, and it would probably, Bloomberg would probably charge it as, look at, you know, they may charge it by how many hits it gets, they may charge it by how many people are there. Not sure how that would work. So you'd had one subscription. Okay, second question. What was that? Real quick.
Senator Pappas?
We'll go through them and I'll answer them as you ask them.
Yeah, the second question was about how that tax would be paid and the administrative costs.
I think how it
Because
has to work.
each location would have to have its way of identifying whether that's pure or not pure. They'd have to have all that technology.
Yeah, no, I think to bypass that, what you would do is that if somebody wanted to pay their taxes in gold, first of all, there'd be I'd say by rule, we would say what kind of, you know, gold that we would accept. And that would really be determined by, I think, the guys in Idaho. So it could be, you know, taken there. It could be verified as to its amount and the purity and essentially the value. And then, you know, at that time, after it's been verified, you know, then that would give us the time for the bid offer spread. And essentially what I think we'd probably do at that time is that then it would be converted into dollars and sent back to the cities or the towns or the counties. And then the state would make that transaction at that time. That's how I see the simplest way to do it, because you couldn't afford to have, you know, several, you know, with $1,000 or $100,000 machine to bounce radio waves off and do a test at every tax point. This just wouldn't be possible. You're right. It'd be too cumbersome. You'd have to have a centralized type of a location to do that. And that's something that we'd have to, you know, cost out, see whether that was available. And depending on the volume, you know, as to whether or not what that would be in any expense that we may have in either leasing or purchasing equipment. Who would pay for it? Who would actually pay their taxes in gold? I think the likely candidate is this new gold mine outside of Cheyenne. They'd probably just take the gold that they got processed down in Colorado if they owed, $1.2 million in taxes, they would probably say, we got $1.2 million of gold, and they'd probably pay their taxes in that way. There may be some other people that are speculators that have hoarded some gold or something, and they might say that, well, this is the best way to sell it because the state's offering us a better bid offer price than what we can take to a gold trader, and I don't have to take a 9% haircut or a 5% haircut, that the state could do it for 2 or 3%. And I think those people would probably use it. So people that have gold already, or and people that mine gold, I think those are the people that would most likely use it. The amount of gold that might be used and transacted in payment of taxes, I couldn't hazard a guess. Okay, yeah.
We'll go to Senator French next.
Thank you, Mr. Chairman. I guess I've got a couple of questions, but I don't know who to address it to. Maybe to Senator Ide or whoever. I'm just going to ask him. Can counties opt out? Can they say, oh, this is a good idea, but I don't want to do it, this county? Maybe the commissioners or whoever say, no, we don't want to go there. And the second question is, say I go in, I owe $1,800 in tax for whatever reason, and I have one gold coin that's over $1,900 and I give it to them. Can I insist that the change I get back, $100 or whatever, be paid to me in, let's say, silver or whatever, and then the last little bit in dollars? Can I demand that, hey, I give you $1,900, I owe $1,800, I want $100 back in silver ounces?
Those are interesting questions. I don't believe there's an opt-out. I haven't really studied the bill. I think the senator could tell us on that. And on the, as far as demanding whether you get your money back on that, I haven't really contemplated that issue. To do that, that would give us another challenge to where we would have to be able to, readily access, incremental amounts of gold. You could do it probably with the gold backs within a certain amount, but you probably won't be able to get down to the penny. So you're going to get some cash back in one way or another because, it's just probably problematic to actually get down to the penny because I don't think we could slice off the exact amount of silver. Yeah.
Follow up.
Real quick, Mr. Chairman. Yeah, because if I'm the person that wants to pay my bill in gold or silver or whatever, and I'm owed some money back, I'm probably going to want it back in silver, and then the last little bit in dollars or cents or whatever.
Yeah.
Thank you.
Senator Ide, do you have comments?
I'll just try to, if you want, Mr. Chairman, answer a couple of those questions and
Please.
move on. I think that, like I said earlier, there's a lot of, and the good treasurer said that there's a lot of details to work out, but I think primarily everything structured in here is voluntary. So if, I know the original Wyoming Legal Tender Act and this new amendment to it this is more of getting plumbing in place. If in fact we do have, disruption in the markets and our current monopoly money from the Federal Reserve Bank. So there's, I know there's going to be a lot of questions, and it's a little bit like some of the bills we've heard. We want to get in place in case there's something to prepare for potential calamity. And this would just give the treasurers the tools to have some options here. There was just a quick comment. There was a court case after the Civil War, 1868, where the county, it was Lane County, Oregon versus the state, and they tried to pay their taxes and devalued greenbacks, so to speak, back after the Civil War, where they printed them and they were effectively worthless. And the state constitution said that no, we want gold and silver. That's what their constitution said. And so they actually, the state won that case and the county had to pay in gold. So anyway,
All
thank
right,
you.
I have a question for Treasurer Meyer. Just broadly speaking, is this bill doable? Can this happen? Can you make this happen? I see the effective date is, you got till January 1 of next year, 2024, to implement the rules necessary to adopt this act. And then everything else becomes effective immediately upon becoming law. So can you do this, Mr. Treasurer?
You know, I think we could have the rules, whether or not we could have the contracts in place and know that that we can, you know, because we haven't had any discussions with the folks in Idaho. We don't know exactly what their capacities are. You know, I think that part of it is still out, but I think we could probably put rules together that would put some flesh on the bones, you know. And I guess what I would say is that, you know, I as far as the effective part of this act, I say let us get the rulemaking authority, get the rules fleshed out, find out what the costs and stuff is going to be there. And then after you guys look at the rules, see if there's anything that you might want to change in the act or tweak before we actually have an implementation.
Good advice.
Does that make sense, Senator? Yeah.
Okay, and then the other questions were, I think, answered. I'm still not sure as how the, I don't know if Director Henson's question was answered.
I think we need to make sure that it is optional and is actually, if it requires an amendment to actually say that, you know, I mean, I think the intent is there, but, you know, I always like expressed things in the statute, so rather than to make an assumption.
Senator Pappas.
To that point, if it's optional, so every tax collecting entity could be optional, would that include the state? Because
I don't think so.
because I don't see an appropriation here, and I know it's going to cost our revenue department a bunch of money to do this. I don't know. I would like to see that number. You know, of course, they probably can't put a number together because they don't know what it's going to entail, but contracts with people who are going to take the gold, equipment for catching counterfeits, subscriptions. I don't know if that, you know, whatever the cost is, I see is we're without an appropriation, we're asking the department to take it out of Hyde. And so it's an unfunded mandate to the department. And frankly, number one, I don't actually see the need. I don't see anybody paying their taxes in gold. I just don't. Maybe the gold mine, all right?
Or the gold hoarder, you know.
You know, give me a break. I just don't think anybody is gonna pay their taxes in gold or silver. I personally, you may know better than I.
Senator Ide.
Thank you, Mr. Chairman. First off, I agree with the good senator at the end of the table here. Maybe not today, but we don't know what the future holds for sure. And this is getting plumbing in place. So if we do have reason for that, and we may have, just going back to the original bill, the Wyoming Legal Tender Act bill, you asked about whether it's going to be forced or not. Well, in that bill, I'll just read it from you. I won't waste a lot of time, but it says, unless specifically provided by law or by contract, no person or legal entity shall have the right to compel any other person or legal entity to tender specie or to accept specie as legal tender. So it's up to, the merchants or the state or whoever that they don't, if somebody wants to pay in dollars, you don't have to say, no, we only accept gold. So it's up to up to the parties doing the transaction. Thank you, Mr. Chairman.
Treasurer, do you have anything else to add on the?
No, just that, I think that there's been a lot of good discussion on it. There's a lot of unanswered questions. I think before the bill becomes law, and I think to Senator Pappas's point that the expenses and stuff should be fleshed out. I think you do that by developing rules, find out what those costs might be, but to make sure that before you move forward with it, that it has a chance to go through the rulemaking process, come back before this committee, and see how you want to dispose of it there when you have the information that would be appropriate. I think that we can get some ideas on the Bloomberg. I think we could get an idea from storage and the different processes that would happen in Idaho. And I think that's, those things I think are good to I think, figure out from the standpoint that if, and this is a little off topic, and I apologize for bringing this up, it's on the Senate floor, I'd be, the chair would say, no, that this is not part of the discussion. But if you ever went to a gold-backed token, then the answers that we're going to get out of this would be helpful, I think, if we ever have a gold-backed token. And I think there's really some, I think what we looked at is it would be the most least expensive way for people to invest in gold, if they wanted to invest in gold, would to buy a gold-backed token. What they knew that was, that it was, the gold was in a safe, had been tested, and it's a property of the state, and they're not going to have to worry waking up one day and there's no gold in the vault, that there wouldn't be an IT or FTX thing or like a Northwest Mint thing happen, And so I think that the information that we would gather in that circumstance, in this circumstance, would probably go a long way toward getting some answers to what really is the cost of handling gold, and even if the state wanted to invest in gold, at some point in time. I know the WRS does, but that costs them 45 basis points a year. And, it's almost 0.5% that just goes away on your gold investments. And if you're doing commissions, it's going to cost you 5% commissions. You could do it a lot easier probably with this vehicle or with gold tokens. But, and there's a possibility to actually make some money in this process. And that's what our group is about, is making money on what we do. And there's some ways that I think that we can kind of explore, figuring out ways to defer the cost, because there are some different leasing things and different things like that on gold, where you can actually get some money when you're storing gold rather than having it cost you while the gold is being stored. So there's some different things and avenues that we want to look at as far as defraying the implementation cost of either this or another program. So we can gather a lot of information so you guys can make a more informed decision. And to the point that I think that both Senator Pappas and Senator Ide made, that this bill is basically just laying the groundwork if we have a situation that we continue to spend trillions of dollars without any visible end to the gluttony that we impose upon ourselves.
Okay. Last question regarding the effective date. on section 3, it says, except as provided in subsection B of this section, this act is effective immediately upon completion of all acts necessary for a bill to become law as provided by Article 4, Section 8. And then section B, subsection B says, section 1 of this act is effective January 1st, 2024. So it looks like your rules are going to be due on January 1st, 2024, and section 1 of this act is effective 2024, and the rest is effective immediately. Do you have any suggestions as to?
Just, Mr. Chairman, I think you'd have the rulemaking authority, be effective immediately. Got a feedback? The rulemaking authority be effective immediately and due on, I'd say, let's try to push this to the 1st of December well, let's see, let's try, the 1st of December of 2023. So if there's something you guys want to work on next session, you've got some information before next session, so kind of push us a little along on that, but don't have anything else effective until 2025.
Okay. Thank you, Treasurer.
Okay, all right, thank you.
Thanks for being here. Director Henson, you want to come back up?
Mr. Chairman, members of the committee, I certainly appreciate your time. But I turn to the first page of the bill, line 2, and it states, requiring the state treasurer to provide for the payment of taxes. That seems to be the focus of this bill, is providing for the payment of taxes. But I don't think it's clear, and I tried to read this as a member of the public. If I were a member of the public, I would read this bill as this is laying the groundwork so that on the effective date, I can pay my taxes with specie legal tender. So I recognize through the rulemaking process, the Department of Revenue, 23 local county treasurers would have the opportunity to work with the state treasurer's office because as an investment, I see where a lot of this language could be used. When I hear the term holding gold, holding money of any sort, that is concerning to the Department of Revenue, and it'll be concerning to every other county treasurer. That's their job is to collect the money and distribute the money. They don't keep the money. We don't keep a dollar. We don't keep gold. We don't. In fact, every transaction is distributed in our system to those taxing entities, and it is to the penny. So I do see some challenges related to payment of tax. The other components of this bill, I think, going down that path, starting that exploration, what does it involve? Perfectly fine with. I'm just concerned with that statement that says, requiring the state treasurer to provide for the payment of taxes. Because I think the public's going to read that literally. Thank you for the opportunity to comment.
Yes, thank you. Any questions? Okay, thank you, Director. Any further public comment? You may on Zoom?
Yes, we have JP Cortez on Zoom.
Okay, Mr. Cortez, please introduce yourself.
Chairman Beitman and the rest of the Finance Committee. My name is JP Cortez. Thank you for the opportunity to testify before you today. I'm the Policy Director of the Sound Money Defense League, and I'm here testifying to strongly urge you to vote yes on Senate File 101. I'll be brief. I know you guys have been here for a little while now. So as you know, the bill would allow the state to use and accept specie and specie legal tender for the payment of state and local taxes. A big part of this bill, the reason for the bill, is that the rampant inflation that Americans are facing today is obviously a problem that generally originates on the federal level, but that doesn't mean that states have to sit idly by while their citizens are are harmed from a broken monetary system. And today's Federal Reserve note, as I'm sure you know, is a manipulated debt instrument whose value is withering away because of this inflation. And so by passing this measure, Wyoming could find itself on the forefront of creating a mechanism, creating a system that one day may be necessary. Under Senate File 101, the bill would allow the state treasurer, it would task the treasurer to determine and maintain these real-time rates. And all of this would be with the aid. The treasurer and the treasurer's team would have ultimate latitude to consult with industry experts, to consult with consultants to make sure that authentication purposes, storage purposes, valuation purposes, to make sure that all of these things are done correctly in a way that benefits or at least protects both the state and the consumer. Very quickly, I just want to touch on 2 points that were brought up earlier. The Treasurer Meyer mentioned the Bloomberg, the cost of the real-time pricing. That is not something that would cost very much. Right now, I looked while we were talking here, Yahoo Finance charges $10 a month for real-time pricing. There are APIs that will also allow you to pull price feeds for free. And then regarding counterfeit, fortunately, the technology has developed in such a way that counterfeiting or validating these metals isn't quite as onerous as it used to be. In some cases, this can be done with a free app on your iPhone. If you're choosing a more reliable method, there are Sigma testers that are relatively inexpensive, that don't require a lot of technical knowledge to use. So the process of validating and authenticating metals doesn't have to be an onerous or even an expensive process. And so to finish, Wyoming's been a nationwide leader on sound money, on gold and silver since 2018, since the Wyoming Legal Tender Act originally passed. Proposals encouraging Wyoming to invest or to store state funds in precious metals have come before the legislature since 2018. Several have. Unfortunately, none have passed. It's worth noting that in that time, the price of gold has gone up 50% in the last couple of years, that Wyoming has considered and ultimately not passed any of this legislation. That isn't because people in support of gold are financial soothsayers or because they are, experts in finance or investing necessarily, but because it comes from an understanding that in high inflation environments, gold and silver tend to perform well. And so it would be prudent for Wyoming, while it's in a good place, to consider and establish a system that would allow Wyoming to one day be able to transact in something other than the Federal Reserve note if it ever had to. And so thank you for the opportunity to testify before you today, and I am available for any questions.
Thank you, Mr. Cortez. Any questions? Yes, Senator McEwen.
Can I get that app for my Windows-based phone, or is it just iPhone? Thank you, Mr. Chairman.
Mr. Cortez.
Chairman Beitman, the good senator, I'm pretty sure you can. There are Android apps, iPhone apps. Some of them might cost you $2.99, $3.99, but the technology exists in a way that's relatively inexpensive.
Mr. Cortez, you probably heard the discussion about the logistics of actually implementing this act and the act of collecting the gold and the silver. You heard the director's concerns. Did you have any comments on that? Have you seen this done in other states where it's actually being implemented?
Utah has passed a similar bill that allows precious metals, or rather taxes, to be paid in precious metals. There are other states also considering legislation like this. I don't think any states have passed legislation or that I don't think any state is collecting a significant amount of tax revenue in gold and silver. To the questions that were brought up, I think I think a lot of great conversation here. There's a lot of good considerations. There's cost considerations. There are obviously administrative considerations. I think so. It sounds like, and this is me kind of shooting from the hip here, and this being part of a larger conversation. It sounds to me like if the treasurer's office isn't involved in any sort of the actual collection or the distribution of the gold itself, and there are 23 local counties that are ultimately responsible for all of that. I think a county, if they wanted to, just spitballing here, could say something like, hey, if you wanted to pay your tax in gold and silver, then you would deal with a designated service provider. For example, a dealer in the state that has testing equipment already, that has validation and verification equipment, and that way it wouldn't come as a massive expense to the state. And And so that would be an option if a state chooses to opt into this process. It could work within the state rather than imposing all of the costs on the state and all of the administrative things responsible to making this happen.
Thank you, sir. Any questions? All right, Mr. Cortez, thank you.
Thank you very much.
Judy, is that it? Public comment is closed. Committee, what's your pleasure?
Oh, I'll move the bill.
Moved by French, seconded by McEwen. Discussion, amendments. What do you think, committee?
I just want to ask one question.
Senator McEwen?
Are we just are we basically laying the groundwork with this and not necessarily putting the whole system up? Or are we looking to put the whole system up with this bill?
I'll defer to Senator Ide, the bill sponsor. Senator Ide?
Thank you, Mr. Chairman, Senator McEwen. You know, this, like everything, it's a little bit, this is a good start. We started in 2018, trying to build on it, you know, a little bit like we did with the Food Freedom Act, make it better all the time. And I see this as, and, you know, the good treasurer in the room could probably answer it better. I think this is to get it in place. I mean, this is laying the plumbing, getting the work ready to go. So as JP Cortez spoke on there, we don't know what the future brings. And we are seeing very painful inflation in this nation. And this is an insurance policy for that.
Well, Senator Ide, this act will become effective, if it does pass and goes all the way, it will become law January 1st, 2024. And that'll make paying taxes with species legal. So we have to have something in place by then. Senator Pappas.
Yeah, thank you, Mr. Chairman. To Senator McEwen's point, this is laying the groundwork, but it's also requiring, come January 1, the state and all those local, unless they opt out, I still don't know about this opt-out thing, unless they opt out, if that's available. To me right now, I don't really see it's available, but they will have to be able to take gold or silver. It's not just laying the work, it's also mandating that they be able to do it.
Mr. Chairman, that's kind of how I understood it. I just want to clarify. Thank you, Mr. Chairman.
Yeah. Senator Wright, I guess my concern is this enough time to get this whole thing up and rolling? It sounds like the treasurer says he can get the study done by January. We have to have the whole infrastructure in place by January 1, and it's gonna, starting January 1, it's go time. Is that enough time to get this thing set up and going, in your opinion?
Thank you, Mr. Chairman. The only thing that I do know is without deadlines, things don't happen very fast. In my business, if we have a deadline, we've got to double up on trying to get it done when we said we're going to deliver it. And I would, that might be a good question for the guy that has to get the plumbing in on this project. I'd say, I don't think there's a whole lot to it, to what they need to do to get this thing set up. So my answer is I think that date is okay, and I don't know if that can be pushed out or amended, if the good treasurer might comment on that here. Thank you.
Well, we need to get this bill disposed of. The motion's on the table, the committee's discussing it, so we gotta get back to work. So Senator Pappas.
Mr. Chairman, if, I think you could pass it with this date, and we could always change it upon further, in a committee of the whole amendment.
Yeah.
The date.
I agree, and I think, Senator Wright, I have a whole list of questions here that we're gonna need answers for by committee of the whole. and we'll get with you, and we'll get with the good treasurer on answers, and then we get with Director Henson on this, if it is the wishes of this committee to move it to committee of the whole. And we'll see if it sinks or swims on the floor. So any amendments? Okay, question being called. Judy, will you please call the roll?
Senator French,
Aye.
Senator Ide. Senator McEwen,
Aye.
Senator Pappas,
No.
Senator Chairman Biteman.
Aye.
Mr. Chairman, there are four ayes and one no on Senate File 101.
Senate File 101 has passed the Senate Revenue Committee. Thank you, committee. It's a long day. Appreciate your hard work and good questions. And with that, the Senate Revenue is adjourned.